Investment giant BlackRock has quietly shelved its multi-billion-dollar Ukraine Development Fund just months before its planned unveiling at the Ukraine Recovery Conference in Rome.
Larry Fink just landed a contract to manage Ukraine's reconstruction fund, $400 billion to $750 billion, the same firm that owns shares in the defense contractors supplying the weapons. Here's the part Fink doesn't want you calculating. BlackRock profits from the destruction and the rebuilding. Larry Fink, BlackRock's chief executive officer, alongside JP Morgan, was appointed to manage the Ukraine Development Fund. That's not aid money. That's asset management territory. BlackRock is a major shareholder in Raytheon. BlackRock is a major shareholder in Lockheed Martin. Those are the defense contractors making the weapons being sent to Ukraine, funded by U.S. taxpayers. Now BlackRock gets to manage the money that rebuilds what those weapons destroyed. Fink's firm didn't just bet on one side. They bet on the entire cycle. This affects every American watching inflation climb while foreign spending accelerates. Here's what we can verify about this vertical integration. Public announcements confirm BlackRock and JP Morgan were appointed to manage the Ukraine Development Fund. Shareholder disclosure documents show BlackRock's positions in major defense contractors: Raytheon, Lockheed Martin, Northrop Grumman, the same companies supplying weapons systems to the conflict zone. BlackRock's press release used the phrase pro bono advisory support. Pro bono means free. What that means for you: the advisory phase costs nothing, but the long-term asset management fees come later. Standard asset management fees run 1% to 2% annually. On $400 billion, 1% equals $4 billion per year. That's the back-end revenue stream. Construction firm shareholdings follow the same pattern. BlackRock holds positions in the major infrastructure and construction companies, the ones bidding on reconstruction contracts. We can verify BlackRock's appointment through official Ukrainian government statements. We can verify their defense contractor shareholdings through SEC filings. What we cannot claim: secret meetings, internal memos, or Fink's personal motivations. What the pattern shows: profit positioning on both destruction and reconstruction. Under Fink's leadership, BlackRock became the world's largest asset manager. This contract extends that reach into post-conflict zones. Here's how the cycle works. First, U.S. taxpayers fund military aid packages to Ukraine. Billions in weapons contracts go to Raytheon and Lockheed Martin, and BlackRock owns shares in both. Defense contractor stock values rise as orders increase. Second, those weapons are used in the conflict. Infrastructure gets destroyed. The reconstruction market grows to $400 billion to $750 billion. Third, BlackRock gets appointed to manage the rebuilding fund. What Fink's team calls advisory support actually means controlling where reconstruction capital flows. Fourth, construction and infrastructure contracts get awarded. BlackRock holds positions in the major firms bidding on those contracts. They profit again. In plain terms, one firm feeds on both ends of the war economy. The hidden catch: taxpayers fund the destruction phase through military aid, then fund the reconstruction phase through development commitments. BlackRock's portfolio gains from both. Imagine you're a taxpayer watching grocery prices climb. Your tax dollars flow to weapons manufacturers. BlackRock's defense holdings gain value. Then your tax dollars flow to reconstruction. BlackRock manages those funds and holds stakes in the construction firms. You're paying twice. Fink earned $26.9 million in 2023. Picture this scenario: a middle-class family struggling with inflation. Their federal taxes partially fund foreign military aid. That aid becomes revenue for defense contractors BlackRock owns. The same family's taxes then support reconstruction. BlackRock manages those funds for fees. The gap nobody talks about. While Fink's compensation package grows, American families question why domestic infrastructure remains underfunded. But what they're really saying is, foreign conflict creates domestic profit opportunities. Here's what that actually does: it turns geopolitical crisis into portfolio optimization. The real cost is your tax contribution becomes someone else's management fee. Under Fink's watch, BlackRock's assets under management reached $10 trillion. This Ukraine contract adds another vertical: Another closed loop. The mechanism isn't hidden. It's just never explained in sequence. Imagine you're a small business owner watching energy costs spike. Your federal tax dollars partially fund weapons shipments. Defense contractor revenues rise. BlackRock's shareholdings appreciate. Then reconstruction contracts get awarded to companies BlackRock also owns stakes in. Your taxes funded both ends. What Fink calls pro bono advisory work actually means free consultation up front, billion-dollar fee streams on the back end. Here's the part they don't advertise. BlackRock isn't just managing reconstruction money. They're also invested in the companies competing for reconstruction contracts. Picture this scenario: a military family dealing with budget cuts to veterans' benefits. Their household struggles while foreign aid packages total billions. Those billions become revenue for defense firms. BlackRock profits from defense stock appreciation. Then those same billions fund reconstruction. BlackRock earns management fees again. BlackRock's public statement emphasized pro bono advisory support. That language focuses on the free initial phase. It doesn't mention the long-term asset management revenue. Corporate justifications typically frame this as expertise deployment or reconstruction assistance. What that means for you, they position it as charity up front, profit on the back end. Fink has not spoken publicly about the conflict of interest optics. The stock price hasn't shown panic, but the pattern is now visible. Some consumer groups and policy analysts have documented BlackRock's positions in defense and reconstruction sectors. Questions have emerged about the appointment process. No formal regulatory review has been publicly announced. One nuance beat: BlackRock's shareholdings in defense and construction firms are publicly disclosed and legal under current regulations. The conflict of interest question is ethical and optical, not currently criminal. What to watch next? Asset management fee structures when they get formalized. Reconstruction contract award announcements and which firms win the bids. BlackRock's quarterly earnings calls for mentions of Ukraine-related revenue streams. Congressional oversight hearings if momentum builds. Public pressure on conflict of interest standards for firms managing post-war funds. The timeline matters. Reconstruction doesn't happen overnight. This is a multi-year revenue stream. Under Fink's model, crisis becomes infrastructure. Infrastructure becomes fees. The cycle keeps running. This isn't the last conflict zone. It's the template. Watch where BlackRock positions next.